Hello YouTube and welcome back to another video. Today we're going to be talking about the gap down pump up. S&P pumped nearly 2% from low to high, and that is generally going to be a bottoming pattern. So what does that mean? Do we have a W for the win for the bulls where we're going to go up? Is this a cup and handle where we're going to pass? Or is it an inverse head and shoulders? Meaning we got our shoulder, our head, and our shoulder. I don't know, but every pattern I just showed you is bullish. The problem here is that price is king, but the volume right now does not confirm. So when I look down over here at the volume, it stinks. It's terrible. So what it tells me is that we're in a low volume move. This is getting over dramatic, and we have to make sure we understand that OPEX next week has an incredible amount of money coming up. So we have $3.2 trillion that's expiring next week. And I'm going to come back and talk about this in a moment. What I want to look at next is just the technical pattern here and what we're looking at. So today we're likely going to be focusing more on the daily chart because I think that right now we have to try to understand where we're going. So we often talk about the levels, meaning the levels that we have for the week. And right now, the levels that matter for me are pretty much what I just snapped here on the chart. So what we're battling for is the first low at 410.64, and the next low we're battling for is at roughly 415. So 410, 415, those are nice big round numbers. This also matters because we're setting up a bullish pattern. And again, you can note that this pink line right now is corresponding with the area we're currently having trouble with. So we've made multiple attempts to get up to here, right? Push it up once, dive it down. Push it up twice, dive it down. Push it up 3 times. I don't know, right? 3 times is quite a few attempts. Normally that's when we get the bull break. So the fact that we haven't, I think is largely due to options expiry, but then also that there's not a lot of conviction in this move, where if the volume is dropping off, it means that people are less excited to buy as the price goes up. And what was very curious is that we actually held a large chunk of the gains into the close. So today is not options expiry, tomorrow is, and yesterday was, but the fact that we went from low to high and actually held gives us what? A nice green dildo. If we're bullish, that's exactly what we want to see because it means that there's very little range on the day. Sorry, very little wick. The open and close are pretty much where the low and the high of the day are. And this matters because as we look here to our hourly chart on SPY, which is going to be the lowest time frame I like to look at, again, we were going down. We put in that IHS right here with roughly 387. We bounce off, reclaim the 50, get to the 200, form a golden cross, and now we've hit it 1, 2, 3, 4 times. That's a lot of attempts. If we're not going to make it on this most recent uptrend here, I don't know that we're going to do it. And I'll talk about the options in a moment like I did yesterday, but first thing for us to look at here is just the volume. So again, summer doldrums are very real where we don't get a lot of volume normally, but there's not a single ETF here that has positive volume. And for the S&P specifically, the volume buzz is about 55% negative, which means that there's roughly half as many trades that are normally happening as before. So volume is one thing, volume buzz is a separate thing. Volume takes into account total shares traded. The volume buzz takes into account the number of transactions. So right now we can note that transactions are dropping off dramatically. There's not a lot of activity that is happening. So as we keep that in mind, now we're going to look at one more thing here. I'm going to have a look at some of these options chains. And let's wrap up on the charts. I'm going to look at the chains to try to understand what this means. So again, looking back here to the hourly chart, as a reminder, what we're looking for is this right here. I'm going to actually take a screenshot so I can actually draw what I want. And here we note that we go, again, we hit it 1, 2, 3 times, and then boom, we go higher. So that right there, this yellow line is going to be the 50 moving average. And here we're looking at the hourly chart. So again, here we're looking at the hour, which is why there's an H. So what that tells me is that it took 3 attempts for us to finally break bullish onto the 50 DMA. First time we hit it, we didn't even really do it, right? Fell through it, didn't quite test it. So now let's look over here at our daily chart. Right? Falls through once, dead cat bounce. There is probably our first test. Then we come back down, form more pressure, and now we're headed for our second test here. So as we look, this 50 MA is curling down awfully fast, which means that if we can just go sideways for an extended period, eventually we'll claim it. So if that's our first test and this is our second, do we need to go lower a third time before we actually break it? Or can the 50 MA curl down for long enough for us to actually meet it and for it to be roughly at this current area? This matters because of OPEX, like I just mentioned. So again, 1, 2, 3 times, and then finally pushed off. And it was really important because then we hit the 200, and the 200 for us is up here at about 445, which is basically my upside target right now. So as we keep that in mind, and now we look at a few more data points, let's try to understand whether or not we are seeing evidence that supports our thesis or evidence that contradicts our thesis. First thing is the fear and greed, where we're slowly climbing out of extreme fear, getting into fear, and then this is how a bull reversal can happen. It gets, it's reluctant at first, buyers come in, and then we go higher. So we are taking higher, which means people are starting to believe this rally. Do they believe it enough to put their money on the line? Not really. There we go. Second thing would just be the heat map. So we're seeing breadth, we're seeing depth, and we're seeing our leaders lead, right? Other than Amazon, which has had an incredible run for the last week. We see Apple, Microsoft, and what else? Facebook pulling us ahead. Other blocks here are notably green, not a lot of red. So we got breadth and we got depth. Doing it by sector, we also note that it's just retail, which is down. And again, we'll talk about Target in one moment here because that gap down pump up also happened there. So now let's look at Target really fast and try to understand what happened here because this is a really important sentiment gauge that we got. So last week we heard from Microsoft telling us that we're going to have revising our guidance down. And Target did the same thing on earnings. That was only about 3 weeks ago. Now they do it again. Then Amazon, Amazon's had issues with their inventory. Tesla's had some issues, cutting 10% of their salaried staff. Facebook had their number 2 person leave, Sheryl Sandberg. NVIDIA, again, had a little bit of a soft earnings. So now what was really important to me was the reaction to another overhang. And the overhang is, oh my goodness, is this Target specific or is this going to be a wider spread issue? So as we look here, again, we nearly got a gap fill and we gapped down by nearly 7%. So from low to high, we were able to snap back by 7%. And we're only actually closing the day down by about 2.3%. This candle's looking pretty good. Volume came in and this looks like a bottoming pattern. Now we want to look at what it did to the other retailers. So again, Walmart here, a little soft. Did not quite fill the gap. So we can understand that when we look here at the heat map and we look at this block here for sector and we note that Walmart, Home Depot, Amazon, Lowe's, I don't know what that block is, Target, those are the ones that kind of got hit today. So we're closing at the high. I want to see what happens as we get closer to this gap fill for Walmart tomorrow. Also have to note that the volume is okay. It's not overwhelming like Target, but the gap down was also smaller. And then we can look at one more here to try to get a gauge. We can look at Costco. So Costco, again, actually closed down by 69 cents. Elon would be proud. Or only about 0.15%. It closed the gap, held it. Volume is on par for a normal day. And that kind of tells me that people kind of shrugged this move off. They don't really care. So now the last one to look at is going to be Amazon because Amazon has had a really nice run lately. And we can note that, again, it closed down by about 1.4%. It actually looks okay. It filled the gap and it's got a spinning top here. So volume is okay. But after a roughly 20% move off the low, actually closer to 27, the fact that this is all we're getting for a back test, it's just completing a bullish pattern, actually. So when we look here, again, what do we have? Well, again, arguably kind of an inverse head and shoulders. We also have that W forming like we talked about before. And this doesn't look all that terrible. So the fact that we're getting a big test intraday and that net S&P closed out at the high of the day, that's a 2% move. So the volume is not as important, but it gives us more confidence that the move is real. Just holding on to the gains is really notable for the bulls. So now let's try to understand a little bit more. We talked about the fear and greed, but one of my more important gauges is actually what retail thinks. So we got about 771 votes on this one here. Thank you to everyone who did it. And we can note that half the people expect that we're going to have a down week. About a third expect we're going to have an up week, and 15% think we're going to be flat. So drop me a comment and let me know what you think. Now that this is where we're sitting here on the weekly chart. And again, we're looking at an uptrend, which is going to lead us to a fourth test, a 416. We're going to zoom up higher to our weekly chart and note that we now have a hammer. Remember last week we formed a hammer and then we puked it up. So just because we're sitting here does not mean it's over. We were right near the low of the day today. Low of the week at the open at 407. Now we're up by 8, almost 9 points. Nice. So looking here, we're much closer to resistance. So we have to pretty much break bullish. So we're up by about 5 points or 1.2% on the week. But we have to keep the momentum going because look, we were putting in a historic move lower. 7 back-to-back red weeks, which we've not seen since 2001. We put in our low. We stage a higher low and higher high, higher low and higher high, and then higher low and lower high, which means an inside bar. So we have indecision after we went down, broke the falling wedge, staged a higher low, higher high, and now we get 3 more days left, or just over half of the week of trading, to actually break bullish and close above that 416, which we noted on the hourly chart. So again, I'd be curious on what you think. You can either go back to our community tab here on YouTube and vote, or you can drop me a comment. All right, so one more thing to look at here is we have some big economic data points. So we get the Thursday ECB rate decision coming in pre-market on Thursday. Then we got core CPI coming in on Friday. And honestly, I don't know which way the CPI print's going to go, but I kind of think we're going to get an opposite move, meaning whichever way we go into Friday, I think we're going to get the opposite move going into next Friday when we're going to have OPEX. So Thursday pre-market and Friday pre-market are the days where we have the most important data now. And we've looked at the heat map here. We're going to move forward to, again, the motivation. So we're going to look at SPX, and then we're going to look at SPY's chain for today to try to understand whether or not the bulls are actually flexing and maintaining control of the chart, or if these bears are looking a little stronger. So here we note that there's $3.2 trillion expiring next Friday, June 17th. And even Goldman Sachs is saying, right, June OPEX is a literally massive, massive $3.2 trillion. One of the biggest, if not the biggest, I have seen in my roughly 15 years in trading the markets. Gargantuan is what they're calling it. It's going to spark a gamma unclenching. And this is so important because there's so much money tied up on here. We can also note that roughly half the money, or 1.7 trillion, is on SPX happening in after hours. So that's going to be on Friday at the close. So the printed price at 4 o'clock is going to be roughly 1.7 trillion on SPX, but 2 trillion total. And then we also got VIX expiry tomorrow, right? Oh, yes, all the nice expiries. So what's really important to me here is that, again, here we're looking at the 16s, but I'm going to actually go beyond and just note the levels here. It's 4,000 to 4,200. So that's roughly 400 SPY to 420 SPY. Where are we closer to right now? We're closer to 420. So that the 1.7 trillion we noted here on SPX is pretty much tied up in these straddles here. It's tied up in 4,000, 4025, 4050, 4100, 4150, 4200. That's where the money's tied up. And that pretty much gives us a range. So the range for me is going to be, again, looking at here, we're going to remove this one line here. So we're looking at roughly 400 to about 420. Oh man, that's the 50 DMA. So again, I think that we're not going to break this range. Again, price action is going to tell us what's going to happen. But as of right now, this weak volume tells me that the actual price on SPY matters less than what the price is on these options. And now let's look at the premium. So if we were to look at the money, which is roughly 41.50, I snapped these at the open yesterday. They're worth about $70 each. However, we're closer to 4,200 than not, which means that these 4,100 options and the 4,000s are going to have what? A whole bunch more premium attached to the call side. So these 4,000s here, even though there's 100,000 on each side, the calls are worth 180 at the open yesterday, and the puts are worth 25, which means these calls have more premium to burn. So when I look at the bottom here, my note yesterday, again, roughly at the open, 7:30 Central Time, tells me here that the theme to me is straddles. It implies a big move. That's what a straddle is. It thinks there's going to be a massive move. So on these 4,000s, what is there? There's roughly 200 points in premium. They get their money back if we're what? Above 4,200 or below 3,800. So if we stay within the range of 4,000 to 4,200, they don't get anything back. They lose. The option sellers collect the money. Again, they think there's going to be a big implied move. Direction matters less, but more premium is attached to the calls right now. So I believe we're going to burn one side this week and the other side next week. If we now look to the top of the chain at 4,200, what's the premium attached here? It's $150. So again, if we go 4,200 minus 150, that gives us 4,050. So if we're unable to break this 420 range here on SPY, the break even for the 420 straddle is going to be at 405. What is that? That's our neckline right here, right? This low right here is exactly 405.02. And again, there's 3.2 trillion reasons why they're going to want to manipulate these charts going into Friday, meaning next Friday. So for now, we think about that. Everyone's going to get paid if we go above 4,200, but that 4,200 straddle is actually at high risk. And why? Because if it closes at 4,200, they lose all their money. both sides will be worth 0. So I think that we're either going to close next week right around 420 or right around 400. And that is why those dates that I laid out before are so critical, because I think that if we move higher to here, they're not going to want to pay out every single chain from 4,000 to 4,200 bullish. So what are they going to do? They're going to want to dump it down. They're going to want to take it back down to the bottom of the range. And that's what I'll be paying close attention to. So with all that said, now let's have a look and see what some of these SPY options are telling us for today. So here's our chain for today. For tomorrow. Again, today's not an expiry day. It's Monday, Wednesday, Friday. Here we have June 8th, which will be tomorrow. What I'm noting here is just, again, where do the 100,000 stacks start? There's no open interest, by the way, right? It's nothing notable. There's a couple here at 410, whatever. There's a couple on this side too, but nothing really that sticks out to me. So what I'm more focused on is the 100,000 stacks. Here they start at 412 on the call side, and they go up to 417. Over here on the put side, they start at 413 and go down to at least 408. We're only looking at the 16s here, which means that we're only going to see 8 strikes above, 8 strikes below. That's where the 16s come from, 16 strikes. So now that we understand that, max pain for me would be about 4125 for tomorrow, splitting the difference between 412 and 413. So if we're able to continue to go higher in spite of maximum pain being lower, right, 3 points lower, that's very bullish. And the fact that we're able to walk it down into the close also means that these bulls understand the scenario here, right? They want to get above 420. They got to be willing to buy at 407, 408, 409, 410, 415. They got to drive it higher. So this is what happens for tomorrow. What's more important for the weekly chains, though, is what happens on Friday. So let's have a look at that. And what also note, again, those 420s that we just looked at, let's actually look at the ones for Friday. That's what's important here. So we're going to look at the premium attached to these 420s, and then look at where the 50 DMA lands. So here, again, where's the volume? Oh, interesting. The big volume right here is at about 415 to about 420. And then on the put side, we're looking here at roughly 410. That's what I'm noticing. Again, we're probably seeing other stuff below, but because we're looking at the 16s, that's not going to be visible. So here, again, what do they want? They want it up. They want it up, right? They want it at 420 on Friday, not above. Why? This is a straddle. So again, this is a spread. So they wanted to drive up to 420, but not actually get above, because they're buying 415 and selling 420. And now if we keep that in mind, again, looking here at the premium, it's roughly $1.25. So call it $2. So now if we look here at the 50 DMA, again, 422.39, but it's curling down. Oh, so it's actually going to be closer to 422 by Friday. Yes, sir. So that's how we get to that 50 DMA test. All right, Justin, take us home. Let's look at one more thing. Let's look at the chain from next Friday. So again, I'm trying to tell you a story. Hopefully I'm doing a better job today than I did yesterday. And let me know what you think. So again, is there a continuation here? Yes, sir. There's 420. There's a volume of 423. There's volume at 415. And there's open interest as well. So this looks like a spread between 415 to 423. On the put side, we got open interest here at 415. We got volume and open interest here at 410. And then everything else is pretty much below, all the way down to like 400. You can also note here that 420 has these. So there are either straddles at 420, or there are spreads from 420 down to 415, and then all the way down to 410. So all this means is that it is professional time between now and next Friday. And if you're looking purely at the S&P chart to try to know whether or not we're bullish or bearish, you need to look at the options chains. I spent a few minutes on it today, but I know this stuff is complicated. So if you got confused today, what I would encourage you to do is to wait it out. And some people might be able to do that, some might not. It's difficult to sit on the sidelines, but it means you're going to survive to trade another day. So if we come back down to 405, now you understand the pattern or the technical reason why we want to do that. But now hopefully you also understand the, again, the options motivation. And with $3.2 trillion, it is a lot of money. You also have to note that if this pattern breaks down, they're probably going to want to what? Suck it back up into the range, at least until next Friday. So my most likely scenario is that I think we're going to hit the 50 DMA. I think we're going to back off, and then we're going to have to decide. Is the CPI print negative when we push back down ultimately closer to 402 next Friday? Or can these bulls not only flex today, but lead us to continuation? Because again, one more time, a gap down pump up is a reversal sign. It's almost engulfed the previous candle as well. We have multiple patterns here which are bullish, right? The W, we got the cup and handle, we also got the IHS, and we have a high of the day close on a 2% move. So if these bulls are truly going to not only get us to 420, but higher, they have to start doing it now. So if you want to know my deeper thoughts for the week ahead, I encourage you to watch the video that'll queue up here in a moment. Otherwise, I thank you for watching, and I very much look forward to seeing you tomorrow. Thank you.